Excitement around artificial intelligence has benefited the semiconductor space, but after the run we've seen, is there still opportunity in the companies that make the hardware that powers AI? Joining us now to discuss is Andrew McKendry, VP for Portfolio Research at TD Asset Management. Andrew, welcome to the program. First time on. Great topic. Looking forward to the chat.
Yeah, thanks for having me, Greg. Looking forward to it.
So let's jump into the semis then. Obviously, people, unless you've not been watching the markets at all for a year and a half, we know about the benefits we've seen for some semiconductor names with all the excitement around AI. What inning are we in right now in this trade?
Well, Greg, it is a very fitting time to take stock here. We've actually just passed the 2-year anniversary of the public release of OpenAI's ChatGPT, which I'm sure most of us are familiar with. The key message I want to leave you with today is that we are in the very early innings of AI, and semiconductors are a key enabler. I think it helps, to start out here to frame out kind of how I would define it. Typically, AI conjures up images of robots and computers and all of that.
World domination and sci-fi dystopian fiction.
Yeah, exactly. But I tend to think of it as productivity improvements, as simple as that. This will be an accumulation of improvements over time, and rather than any kind of big bang that we're going to see. Let's try to put some numbers around it. Given it's so pervasive, we can actually look to global GDP as a starting point. So if we take this $100 trillion number, global GDP, and you add a productivity improvement estimate, call it 5%, that's $5 trillion. How much would you pay for $5 trillion in better improved productivity every year? Well, it's probably more than $5 trillion. That is the direct benefit, essentially, over time to these hardware semiconductor companies.
Is that the way people should be thinking about it? Because you said AI conjures up all these images. We're talking about productivity gains. At the same time, there's been so much excitement around AI. Does that put the excitement at risk when people say, like, it'll be incremental productivity that will benefit society, but it might not be the killer app or this big, sci-fi kind of like explosion of a new tech?
Yeah, I think so. I've brought a little prop here. This is the new iPhone 16. Just came out. And the reason why I purchased it is, Apple is just introducing new AI features. Nothing gangbusters, and it's going to come over time. But for example, things like summarizing messages, smart replies. It will, be able to write for you. If you're an iPhone user, any kind of Apple user, we've had kind of comical interactions with the Siri chatbot already. And, I'm very excited about improvements that are going to come there as well over time. So these are kind of the baby steps that I expect, but the accumulation of which we will be, are going to collectively make our lives better and more productive.
Yeah, the other day I noticed that there was updates for the iPhone. I said, I'll update to that. And said, no, sorry, you have an iPhone 12. You're not ready for these things. It's the 16 that can take this. You can take the other updates. So now I'm starting to realize I'm falling behind the pack in the real world applications for AI. So when we think about the build out for artificial intelligence, I mean, we've seen a lot of tech revolutions, over the centuries, really, when we think back. How does this compare to other tech build outs?
Okay. Great question. And this is, this is going to be big. We've talked about these trillions of dollars. This is very big. I think back to the internet revolution, when all of the internet was kind of building out. And of course, the big difference this time is that we have companies that are making very rational decisions that are actually quite profitable. But in terms of the scale of AI and the impact, the internet, that's a pretty good, I would say, a proxy. I've also seen talk of, the mobile phones. Once we all started using mobile technology, that's kind of another era that you might think as similar to this AI build out. But I recently heard one analogy that I really like. And this was from OpenAI's CEO, Sam Altman. And what he said was that he believes AI is like the invention of the semiconductor, essentially. A very complex technology We now have a huge supply chain built around it. Essentially underlies everything we do, makes our lives better, but we really don't need to understand it. It's happening all around us.
I can't build the car, but I learned how to drive the car.
Exactly. So highly, pervasive and going to be impactful, underlying everything we do. And of course, as a semiconductor analyst, that resonates as well.
When I think of my interactions with AI in terms of some software I've been playing with, it's not happening on my computer. It's going off into the cloud. It's going to a data center. That's where all the heavy computations are going before I get a product back on my phone or on my desktop computer. So let's talk about this build-out of data centers. I think you have some pictures to show us too in terms of what's happening in that space.
Yeah, sure. So what I'm showing you here in the blue, this is essentially NVIDIA's data center revenue. A few years of actuals, and then the recent gangbuster growth, 2024, and then expected growth approaching almost $200 billion next year. NVIDIA, we know, produces the accelerator chips that AI really likes for the math that it needs to do. And so NVIDIA has really been the poster child for this initial build out. Couple of points. I wanted to include this gray bar there.
Yeah, that's not a drop off, is it? Is this some sort of benchmark? Or?
Yeah, so good. So not a drop off. This is not NVIDIA. What I'm trying to represent is the aggregate global data center market, essentially, global data center spending, prior to this AI build out. And it really demonstrates that we're in uncharted territory here. So you've got NVIDIA's data center revenue up approaching 200 billion, nearly double what we used to spend on servers. So that can be, probably a bit of a source of risk, a little bit of concern there. I think that's natural, and we need to, be vigilant around that. But if we put these $200 billion number in the context of the $5 trillion, the multi-trillion dollar productivity benefits we spoke about earlier, that's where I'm telling you we're in the early innings. So this looks big in history, by history, but a lot more to come.
You mentioned risks there. I think you have another chart you can show us in terms of what we need to be mindful of in this space going forward.
Yeah. So from a risk perspective, this pulls back. This is actually a little broader than AI. This is the semiconductor space overall. And what I'm presenting here, the bars are year-over-year growth over time. And the line is a broader index of semiconductor stocks and how that's performed. The takeaway here is just, this is a cyclical sector. We have periods of growth, and then we have periods of decline. That also, rather than say like a software sector that kind of can tick up over time from a growth perspective, we do get these drawdowns. From the stock perspective, it plays out there as well, where we definitely see volatility. So in the aggregate, this is a 10-year chart. We see the stocks outperforming, the S&P over time, but there are periods of significant drawdown. So if you're asking me what, the biggest risk in semis overall, and AI is no different, is periods of drawdown or digestion, let's say. Of course, so that's the first big one. The second I would say is just geopolitics. We've read a lot about, China, US, and a lot in the news, kind of back and forth, any kind of incremental tariff activity, export restrictions, that kind of thing can impact the space. So I would point to those two dynamics.